And I want to understand what everybody's needs are. Given the fact that not everyone is gonna fully understand the strategy, not everyone is gonna make use of it, you know. But for the few that will be able to understand, I know it's going to be beneficial to you because what we have works. So I want to understand and I want to break it down. I want to have a sequence of breaking things down to you so you can understand it perfectly. So when you trade, at least you make some money for yourself, you know? And also, I want to make you understand there's a psychology behind trading. When you trade, you want to trade to make profit, but then you don't want to trade every single time. Okay. So if we can start by knowing exactly what you're struggling with in my strategies, that would be beautiful. And if you've never seen me, right, okay, if you've never seen me, analyze the market before, it's fine. Just watch what I do here. And then if you have questions, you can post it into the webinar group, into the Telegram group. I don't really talk much in the Telegram group like I used to before. I have so many things on my plate. So I still try to make time every weekend when I can to push this forward to people so you can carry on and trade effectively. You want me to shed more light in the entry, right? Now, let me tell you, you don't really need to bother about your entry. Not at all. You know what? Don't bother. I know I might cut out for a second. It's going to sense. I don't know what that's that. Okay. So what I'm gonna do is I'm just gonna move my laptop and use my normal sound. I hope you can hear me this way. I'm not sure if you can hear me. If anybody has any idea on how to operate M Audio Air 192/6, please let me know because this thing gives me a problem and I've contacted support so many times. And the support has let me know that everything is set up correctly, but for some absolute reason it doesn't work well. Always disconnect unless I'm doing music. More volume. Hold on. It's not letting me do more volume for some reason. I can't. It's different from the sound card. With the sound card, I can turn it on, turn it up, and turn it down. Yeah. So, and the computer is always tucked away, so I had to just bring it out from where I tucked it in. Let's see. What about now? Is it better now? Should be better now. The sound card is coming back up now. Apologies, I don't know if you have any idea on how to work M Audio Air 192 version 6. Please let me know because I literally paid some good money for this stuff and I was expecting it to be very good, but it keeps cutting in and out. Except when I'm doing music, then it doesn't do that. Yeah. So when I say entry, you don't need to worry about entry. There's only three things you need to know. Is it on a support or resistance you want to go in? When did the candle starts? And do I want to go in when the candle is already moving in my direction or moving against my direction? Those are the three things you're going to know. I'll give you an example. If you want to go into an asset, don't come on 15 minutes and do an analysis of where your entry is going to be. You're most likely going to lose. Start from the daily. Just start from the daily. Now, let's think about this logically. The candle is going to have an open price and it's going to have a close price. Whatever it does in between is what kicks most people out. It's not the open or the close that kicks people out that you stop making money. You lose money from what's happening in between, you know, the price going up and down. Now, that seems to be the most challenge that people have, is you get over leveraged when the price is moving in between because you're emotionally connected to your money. And Aslan said it already, money management. So let's do a quick strategy or quick look at it. If I wanted to go long on this day, for example, I know this day I'm looking to go long, you know, I don't know if the price is going to move 1 pip in my favor or 55 pips or 66 pips like it did yet in my favor. Now, what I could easily do, let me delete this because that was when I was doing my personal analysis. So what you can easily do is if you look at the price opens right here, you know, it's going to open right here. To not look about, you know, to not worry about entry at all, you can go and bang on right here. But it doesn't mean you get the best entry price, right? Because price could pull against you. And if you have a stop loss right here, you get kicked out, right? And when you get kicked out, it hurts because price then goes back in your direction. Now, before you go into a trade, have a mindset. I'm only going to commit, let's say, 1 lot to this trade. That's it. 1 lot or 0.1 or even 0.01 to this trade. That's it. Final. I'm not going beyond that point. You know, once you have that mentality, like that's what I'm going to do, then what you need to do afterwards is easy. At what point can you go into the market that even if the market pulls against you, you're most likely not going to lose that trade? Now, let's say the entry right here. Let me see if I can get an arrow. Oh, there's no side arrow. Just have to, I want to see if I can get, let me see if I can get this. Okay. So this level right here is your entry, right? Now, you don't want to go in here because, you know, most of the time, sometimes price could go way off before it goes back in your direction, right? So you know you're not going to go in right here. And secondly, you do not want to go in right here neither when price has already moved up. Thirdly, you don't want to go in right here. And fourthly, you don't even want to go in right here at all. Because at that point, if price pulls against and try to raid the people that are in already from here, you lose, right? So guess what? Where do you think is best to go in? It's to go in from the wick below here. Anything below the starting point is beautiful for you, because when price start going in your direction, you don't have to worry about the body because your entries are stacked in the wick. Are you getting the gist of it? Don't, first things first, don't look on the 15 minutes, 5 minutes, 1 minute. Don't do that. Don't even go to the 1 hour, even 4 hours. Ignore 4 hours. Because we don't trade, we don't day trade, right? We seasonal trade, and sometimes we swing trade. So your best option is to let the price come against you first before you go in. So do you understand that? You know, do you understand what I mean when I say that? Someone asked that question. Let me ask that question. Yeah, Leo. So Leo, you understand that, right? Cool. So now let's say you don't know how far price is going to go before, you know, price moves in your favor, start going into the entry. So we know our entry day is right here. Let's say right here, bang on. Now we know that we don't want to go in at the start of the day because price could come against us, right? And we don't want to go in anywhere beyond the start of the day, all right? So what we have to do is we have to wait for price to start going against us. And how far do we think we need to know? That's a guessing question. That's all you need to know in entry. You don't want to go in on the body of the candle. You want to go in the wick. Now, there's sometimes price don't have a wick, like here. Situations like that, for example, you might have to let the trade go. Regardless, you might be right. Or you wait for the trade to have a pullback. You know, you wait for the trade to have a pullback on another day, not even on the same day.
So in situations like that, that's exceptional cases. Let's put that aside because most of the time, 80 to 90% of the time, most candles are going to have a wick. Now, if you look at our trading strategy, it has to do with history, right? Every price has history. Every asset has its own history, unless the asset was listed today. And even before it was listed today, there's a history in the company because they've been dealing business. Now, what you can do is look at the historical fact of how price has been moving prior and use that to analyze. Now, keep in mind, there's something called, I think, I can't remember. I don't know if it's this candle wick display. Yeah, it's candle wick display. I will set that to 1. Now, this shows me the wick size, just the wick. That's all it shows me. How many pips the wick is, you know? Now, let's say, for example, we wanted to go in on this day. What we can do is look at the updates because that's a buy. You look at the updates, you look at just the wick. The wick of the updates, count 5 candles back and do an average. That's all you need to do. Let me try to grab a calculator. Can't find my phones. I don't know where I can. Okay, found one. Right. So let's do these calculations together. Let's just run a quick calculation, right? So if you grab your calculator with me, and then you go here. Now we want to go in on this candle, right? We know we're not going in at the start. We're not going in anywhere here. We want to go in when price start pulling back first. So the first candle right here, we have 31 pips, right? So let's add, well, we're only looking at buy candles, by the way, because we know we're going long. So let's add that up, 31. I normally do 5, but you can do an average of 7, whichever one you want. I do 5 because there's 5 working days in a week. So the market is open for 5 days. So it gives me an average of that week. So I do 31 plus 8 plus 2 plus 3 plus 48. And then that would give you 92. And then you divide that 92 by 5. It's just pure average. When you do that, it gives you 18.4 pips. Now, if I look at the market and I'm like, look, I'm not sure when to go in, but a good reference point for me will be at 18.4 pips. Price will be somewhere around here. I'm not sure, but I'm just doing a rough estimate. That's 15 pips. So it's kind of a rough estimate, just somewhere slightly below, around here. But if you look at the 18.4 pips that you go in and you take that out of the average of the pip size that is done on that 28, you will have 9.6. So your stop loss is only 9.6. But because we know the stop loss, we use ATR. So let's go to insert, indicator, average true range, and we'll use the value of the ATR. So let's go on the 4 hours, for example. Let's say we do the ATR times 2. Now, if you're going in on just 0.1 pips and you did your ATR times 2, that's 34 times 2. That's 68 pips. So even if you went in the market at 18 pips and you set a 68 pip stop loss, there is no way price is going to come against you, because if price goes against you and kick you out, that means the market is not even going in your direction in the first place. Yeah, I'm not fully sure, Chima, but I think I get the idea that you're putting forward. So basically what you're doing is you're waiting for the best price, just like, Mr. Chima, I think you're trying to say. Premium, like a discount, yeah, just like a discount. You're waiting for price to come to that specific amount using the average price movement in the past 5 days to determine where you go into the market. And once you're in, guys, once you're in and you set your stop loss, that's it. Don't put more positions. Discipline yourself not to put more positions. The only thing you look at from that point is your take profit. You can close trade as it goes along, even if it's one entry. And let's say that one entry is one lot. You can close 0.3 out of it. You can close 0.3 out of it, 0.3 out of it, 0.1 out of it as price goes up. But that's a video for another day, Exactly, the emotions. So that's how you treat the entry, Leo. Nothing more, nothing less. That's all you need to do. Don't go in at the start. Do your average range. Once you have that average, set an alarm, put it where it's meant to be. And I think you can set an alarm. I can't remember how to do it, but there's a way to set an alarm right here. Mukhtar showed me in the past. Trading, yeah, alert. So you go trading and click on alert, right? It will set an alert right there. I think you can also move it. Yeah, you can move it. Enable with sound and all that stuff. You can get it to email you and whatever. So when price gets to that point, you get an alert. You can move it up. You can move it all the way up as you want. And only when price gets there, you go in. If price doesn't touch it, let the trade go. Wait for another day for entry. So I hope that solves that question. Is there any further questions that I can look into before I go into today's analysis? We'll have a few minutes left for analysis. So please let me know if you have more questions. Beautiful. Thank you. Does anybody else have a question in regards to that? Is there anything you need to understand in regards to that? Because I can answer that for you now. Okay. So in that case, can you please, yeah, good, perfect. So now can you please call out Nasdaq? Okay, trades you want me to check. Nasdaq, okay. Please list the other trades you want me to check as well. I'm just gonna go here. All right. Okay. Is there any other trades anyone wants me to check? AED card, Nasdaq. Okay, I'm just gonna delete
Good
this.
evening, Mr. Deji.
Yo, bro, long time no speak. How you doing?
Mr. Deji, good evening.
Good evening. How you doing, bro? You good? Can you
I'm
hear me?
fine.
Yeah, beautiful.
Please, Eric, I'm doing great. And you?
I'm great, thank you.
Yes, I can hear you. I'm doing great. And you?
Yeah, I'm doing great. It's lagging. That's
Please, one more thing I want to understand is this strategy. How can we manage it alongside with the news release? Because there's one thing I've come to observe is that most of the time, even if we analyze, if it doesn't align with the news that is coming up, the news will affect it. Then when the news release is over, then we might start seeing some alignment based on our analysis, like what happened on Euro NZD last week. I did analysis, I saw it going on the short side. Maybe the London section began. Then it went on the opposite direction until about Thursday. That was when it's aligned. So I want you to throw more light to that.
And so I'm trying to get you correctly. You say, how does news affect the way the market plays out? Is that what you're saying?
Yes, I say that I've come to understand that the news release, they also affect this strategy a lot. Okay. Like I made an analysis last week on Euro NZD. So I didn't work out until the news release around Wednesday. It came out in favor of NZD. That was when NZD aligned to go on the downside. So I just want you to throw more light on how we can also manage the news and with this strategy.
So let's say, for example, now you're about to trade NZD and the seasonality is pointing in a direction, the COT is pointing in the direction, the probability is pointing in the direction, and you have your Williams also pointing in that direction. Regardless you have news or not, just continue like this. Literally the same thing. Now, if the market doesn't play out how you want it to play out, which is not going to every single time, that's part of the business, part of the game. You have to have contingencies in place. That's why you have the ATR stop loss in place, in which that stops you or limits you from going beyond that day. So let's say you did all the analysis and then he pointed out on Monday, but the move happened on Thursday, and there was no way you could have seen it in the analysis that was coming. You just have to take that look, it didn't work on that day, and let the trade go. That's, if I'm understanding you correctly, you're saying you did the analysis and everything pointed in that direction. So your COT pointing and NZD is going, let's say, down, for example, and seasonality is also saying it's going down. Keep in mind, seasonality has to point not 1 or 2 days. We're not talking 1 or 2 days pointing, like a whole stretch. We're looking at the whole stretch, make it maybe a whole week, 2 weeks, a month, and that's pointing that direction. And your probability has 3 days, for example. You have to have at least 3 days pointing in the same direction. And then your Williams is also pointing down, for example, and that doesn't go in your direction, which is rare, but it happens. And it doesn't go in your direction, then what you need to do is just let that trade go. Regardless, it happens on Thursday afterwards, because now you're chasing it not based on your strategy anymore. You're chasing it based on previous strategy, and the hunch that you have is going to keep going down because that's what you've seen before. So in scenarios like that, just use your normal ATR stop loss that we did previously just a moment ago. And if price actually hits that stop loss, so let it go. Let it go. Don't watch the trade anymore.
Yes, sir. Please, if you get my question correctly, sorry for taking the time. What
No.
I'm saying that all everything that was analyzed aligned, except the news release. The news release is against the analysis. That's what I'm saying. And most of the time, it doesn't work. It doesn't work out well if the news release is against. Everything have aligned, both seasonality, probability, COT, everything, but the news release was against the analysis.
You see, the thing with the news releases, when you have news is part of things that we can't control. The emotions that we cannot put into play. There's no way to quantify the news that we're going to get, you know. So the best thing is to position yourself based on your strategy. But when the news comes into play and it doesn't favor you, which is something we can't control. I don't have access to the news, for example. I don't have internal information on news, you know. Then there's nothing you can do. You just have to take that hit. Literally, there's nothing else you're going to do. In this business, you're going to take hits. Every now and again, you take hits. But when the news aligns in your favor next time, make sure you take as much as you can out of it. And when I say as much as you can, it's not going in and you see price going 20, 30 pips in your favor and quickly closing it because you're thinking, oh man, I might not get the opportunity to make this money again, you know? So in scenarios like that, when news don't favor you, just let it go, you know? Take the hit and just let it go. There's much more trades that are going to play out in your favor. I guarantee you that. I hope that clarifies it a little bit more. It's harsh, but you have to take the hit. Okay, beautiful. So let's move. I think we have a few minutes that I can spare to do analysis. Let me see what we can find in that few minutes. So I'm going to check Nasdaq first because Nasdaq, literally, we don't have probability data. We don't have COT for it. So I'm just going to check that, get that out of the way because it's the easiest one out of the list. So today's the 29th, and let's see what we have in regards to Nasdaq. Just taking this time to note. While that's loading, I'm just going to load gold. This is taking, Nasdaq is taking its time to load. I think the server itself is taking its time to load, to be quite frank. Okay, here we go. All right. So we are right around something like this. Yeah, so Nasdaq, for example, it's kind of tricky with this one because 5 years and 48 years is pointing going long from the 30th, which is tomorrow. But the 15 years is pointing, it's only going to go long to the 1st, and then it's going to bottom out. And then, you know, 5 years and 48 is still going up. So if you're trading Nasdaq, it's going to be a high risk trade, but the sentiment should be long. Keep in mind, it's a high risk trade. So I'll be very, very careful with this one. It's going to go long because 48 and 5 years align, but 15 years does not really align. So only aligns for 2 days. So that's the one on NASDAQ. So you have to be very careful. It's a very high risk trade. So that covers NASDAQ. Let me look at the list. We have AUD CAD. Yeah, I've opened gold first. I'm going to open the AUD. Okay, I'm going to do that next. Let me get COT report. I'm going to try to do as quick as I can. AUD, CAD, and then we have Euro. Taking tied to low. Okay, so we have the CAD sentiments pointing down. CAD short. And I might not be able to fully explain this because we're running low on time. So basically we look at the commercial information, the changes, and we see that there's the plus sign. They added 786 position. They took out 4,000. So for CAD, so I'm gonna put that as short. Short means basically going down, selling. CAD. Server seems to be running slow, guys. No, we don't have US 30 or German 30. No. Yeah. We wouldn't have time to check everything. The time does run fast. Gold, we can't do anything with gold because they're taking our position from both sides. So we're gonna let gold run. And next thing we look at AUD. So they're adding positions on both sides, but this side supersedes. So AUD will be going short. I'm gonna put a star next to it. I just always do, just to keep in mind that they're going to put two ways. So that's going short in AUD. Euro. Good. Euro is going short. Euro. So euro is going short. That's it. So you got AUD, CAD, and euro. I checked those three. So I'm just gonna move to analysis. I'm gonna move slightly faster than when I normally move to because we have 7 minutes on the clock. I normally try to keep it like this, not to make it go boring. CAD. So let's check CAD first on seasonality. Let's see what seasonality it has to say on CAD. So we're looking for short on CAD on seasonality. And if we can find short, then we might have a strategy, you know, we might actually have a trade this week. Keep in mind, we still have last week's trade going. We still have this AUD going. So I think I told you guys to come out on Friday. So if you haven't, I would recommend coming out at the start of the opening of the candle. So CAD, we're looking for short. And so we're currently right here. Now the short that's coming on CAD is coming from the 30th to the 1st. Now shorts like this, right? I don't take this type of trades. It's 3-day trade. You know, I don't really take this type of trades because they're very short, and the likelihood of them happening is very low. So, and when we looked at CAD anyway, we had a very small position going short. So I'll put it down here for guys that like risky trades, you know, that don't mind. You got a big balance. 30th to, I think, 1st, right? To 1st. Next thing we'll look at AUD. Let's see if we can get AUD. What was it? AUD on short. So 29th to it's similar to the same this thing as well. So AUD is also short. I think that one comes from 29th short. Let's just put 30th because tomorrow to the 1st. And then the last one we're going to check is euro. So these are short, very short-term trades, swing trades, 3 days. You know, I normally don't like taking them. I like taking a slightly longer trade, but sometimes if that's what it gives, you can take the risk. Now, euro also is on the same predicament. Euros one is even shorter. No, it's actually the same thing. So euro two is the same thing. Yeah. So euro is also the same. Now, the only thing left to do is to check the probability for CAD. CAD CHF, CAD JPY. I know euro is going down, so I shouldn't really be checking euro CAD. P. So we're only going to check for those 3 days. And let's see what we have for, which one is this? CAD CHF. So May is done. So we're expecting CAD to go down, and right here it's showing up. So I take that out of the equation. And then let's see, May 50-50, take that CAD JPY out of the equation. Just quick analysis, nothing too major, you know. Euro CAD, because Euro is that we're expecting Euro to gain strength, but because both of them are going the same direction, I really do not want to take this trade. I've learned from history when 2 assets are going weak, I just don't want to be touching both of them, you know. So we got USD CAD. USD is losing strength rather than, you know, CAD losing strength, so we let that go. And GBP CAD, so GBP is also losing strength, so we let that go. So what I've noticed, wait, what happened? Oh, glitch for a second. So what I've noticed so far with the CAD one is we don't really have a trade with CAD. It doesn't look like that. And sometimes it's okay like that. NZD CAD, okay, NZD CAD seems to be looking good, you know, 53, 70%, and then, you know, 50-50. So NZD CAD long 30th till, I would even say 31st, because on the first to 50-50 or first, high risk. So that's one trade right there. And it might seem like I'm moving very fast. The only thing I'm just checking is the probability if it's higher than the other. Nothing too much, nothing too special. AUD CAD, we're checking AUD as well because they're both going short. I don't really want to touch it. It's telling me AUD is going to go short. So that's that one with that. And I think we have 1 minute left. So we can check the one next, AUD. I don't have much time, so I'm just going to do what I can within this 1 minute. I try not to extend this webinar, just, you know, if you really need to analyze it, you know, it would help you by telling you the direction to go. So basically, so look at AUD, CHF is going up. We don't want that. I want something pointing down for AUD. So yeah, AUD JPY seems to be pointing down 2 days. So AUD JPY short. So those are the two that I can check with the time that we have left. So I mean, you guys can run checks on the rest of it. Those are the trades that I have for you guys. So if you have any questions, please contact me on Telegram. I'll answer you. And if you need anything else, please let me know. You can get the membership on the website. Thank you guys for joining today and have a good day. Please pay attention to the entries as well. It's important, as I just said. Okay. Take care of yourself, guys. God bless you. Thank you, guys.